Ballet. Bobby, of course, you've touted $100,000. You're now touting $1 million. Talk to us about why this rally is justified.
So this rally kicked off, on the heels of Trump's election. It's been a crazy week, right? Even into election night, the price started rallying. And when Trump got confirmed as the next president of the United States, a Bitcoin rally really took off. And in the last 24 hours, we saw it jump over 10%. So it's very close to hitting it's already at an all-time high, and it's very close to hitting $90,000. It's been crazy.
Fundamentals, just putting out there, fundamentals have not changed. Use cases have not changed. Is it just a matter of an oppressive regulatory environment turning supportive regulatory environment overnight? Is that what it is about?
I think there's two factors. Number one is, for the first time, we have a truly pro-Bitcoin president, right? So President Trump, at the time as candidate Trump, in the summer, in July, he gave a big keynote speech at one of the world's largest Bitcoin conferences in Nashville, Tennessee, and came out to be very pro-Bitcoin sort of policies, and the crypto market loved him for that. And with his election, the whole crypto market is very excited. So that's one thing. From a policy perspective, we're anticipating a lot of crypto-favorable policies in the United States. And the US, of course, leads the world in terms of regulation and policy in the financial markets. And there's no different for crypto. But the second thing is that Bitcoin fundamentals has not changed. Bitcoin is 15 years old, turning 16. And the two fundamentals are: it is a decentralized digital asset that is not issued by any country nor any company, and it has a strict limit of 21 million. So these two factors are slowly, through media and coverage, slowly resonating with investors and the global population. And it's taken 15 years to get to where it is today. And it just takes more time for it to really sink in why Bitcoin is a global reserve asset class.
So regulations are changing, but what would really move the needle is institutional buying. How much of that are you seeing happening right now?
So it's been great. This year is a breakout year for Bitcoin. If you recall, earlier this year, the US market approved Bitcoin's first sort of ETF, spot ETF for Bitcoin. And that was in the waiting for many, many years. 5-6 years ago, people were anticipating and eagerly awaiting for final approval for ETF trading. And finally, this year, 2024, we saw that kick off in the first quarter. And so with that, more institutions and individuals, retirement accounts can all buy Bitcoin very safely, very easily, and there are over a dozen choices for ETFs. And similarly, it's mirrored itself. Other markets like Hong Kong have also issued Bitcoin ETFs, and we can see that rolling on a global basis. So now companies itself are also adding Bitcoin to their own balance sheet, of course, led by the market leader MicroStrategy, and many other companies are starting to consider and starting to do it on a smaller scale. So we'll see. We saw individual investors getting into Bitcoin. We saw family office getting in. We saw funds getting in. Now we're seeing institutions, and eventually we'll see governments at the nation state level adding Bitcoin to their reserves. And by the way, this is what Trump talked about.
But the thing is, Bobby, how much of this rally is driven by institutional buying? How much of that are you seeing right now in this rally?
It's hard to say. It's hard to say. One thing is, over this long weekend, it's Veterans Day in the United States. So markets were closed on Monday. And in essence, all the ETF trading is not trading, right? So we had a 3-day long weekend. And over the weekend, the rally has really pushed up Bitcoin 10-15%. And I personally think the cause of it is that people have no access to the ETF buying, right? So they have to resort to buying on exchanges. It's very hard to identify exactly who is buying. There's unlike a stock market where it's centralized, people can tell which brokerage accounts are buying and so on and so forth. For Bitcoin, given the global nature of it, people are buying on a dozen different large exchanges all over the world. So I think it's a combination of institutions, big whales, and also traders.
You've been calling for $100,000. It's at about 88. When do you see Bitcoin getting to 100K? And when do you see it getting to 1 million? That is what you're projecting.
Yeah. Yeah, so I anticipate this time we can cross $100,000 this year by, by end of December 2024. I think it's very easy to get there. I think we're going to cross $90,000 within the week, and it's just 100K will be psychologically a big barrier. So there's a lot of people selling pressure near around $100,000, but I think it's easy to overcome that in the next few weeks. I think we have 7 weeks left in this year, 7, 8 weeks left. And then for 1 million, that's a sort of even bigger milestone. We're going to see a bull market this year and next year in 2025. I think it's going to be very hard for Bitcoin to cross $1 million in this cycle. So probably one more bull market cycle. That's probably 5 to 6 years out. And there will be some major price corrections as well. So beware of that volatility.
Bobby, some are suggesting that once Bitcoin get to $90,000, there will be some resistance because of market makers. What do you make of that?
I think the resistance is always there. There was resistance at $80,000. There will be at 90,000, 95,000, 99,000. I think the big resistance will be at 100,000. At the same time, because it's such a psychological target, there will be a lot of bullish speculators who will leverage and push it up. So it's kind of like this big tug of war. When the price gets near $100,000, you'll see more people joining both sides of that tug of war, more people to buy to smash it past 100,000. And you'll also see at the same time, more sellers coming in to sort of sell off Bitcoin before it approaches $100,000. So that's going to be a very, very big psychological barrier. And I think we have the ability to cross it this year.
It is interesting to see how Bitcoin has breached its pre-pandemic high, right? But we've not seen the same for Ethereum, for instance. Whereas when it comes to use cases, some say that, Ethereum leads the way. Why is that, you think? Why the differentiating factor in terms of within the crypto world?
Yeah, I'm glad you brought it up. It's an excellent question, the use cases. So I've been in Bitcoin for over 13, almost 14 years. And what I can tell you is that the use case for Bitcoin and Ethereum are fundamentally different. Bitcoin presents itself as money, as digital money, as an asset class, as an investment asset class where you can hold Bitcoin to sort of protect yourself against inflation of fiat money, because governments all around the world print more and more fiat money, including the US dollar, including all the countries out there. And then that's why you have the inflation, the high CPIs, and all that stuff. Whereas Bitcoin, fundamentally, it's fixed at 21 million units. So it serves as money as a global reserve asset class. Think of a better version as the current SDR. Think of it as a digital version of gold. Now, with Ethereum, the use cases you're talking about are more of the on-chain, the smart contracts, a lot of the utility aspects to it. So it serves a different market. I think Ethereum has great use case, usability, including NFTs and so on. But fundamentally, Ethereum is not about money. Bitcoin is about money, so very different use cases.
We talked about how the regulatory environment will be easier, right? Hence, we're seeing this rally. But there are other issues which are tough to crack, right, Bobby? I mean, access to banking, for instance, banks are pretty reluctant to take on clients whose, the business model is pretty volatile. How do you counter that?
Yes.
And how would that impact where cryptos go from here?
Yeah, the reason the banking sector is tough is because of the existing regulation on the financial sector. So banks are under the burden of regulation regulated globally, mainly led by the US, for the anti-money laundering, a lot of the know your customer. So a lot of these rules are very heavy burdens for banks. That's why they're shying away and don't want to onboard crypto. Okay, that's why it's been a struggle. I saw this in China, 10 years ago, and we're seeing it in the rest of the world as well. But over time, if countries take this seriously, for example, like El Salvador, they've made Bitcoin legal tender. And by that definition, the banks in that country are now compelled to do business in Bitcoin. All merchants are compelled to take payment in Bitcoin. So when you have a shift in the regulatory regime and the shift in the perspective of how Bitcoin is treated in society, you'll see the difficulties from banking sector unwind. and allow for more sort of smooth transactions for Bitcoin.
You're talking about how it will take time. You said over time. Give us a time frame, realistically, when that might happen.
So there's two aspects for time. In terms of the pricing, people care, a lot of people ask about that, just as you did for the 1 million. I think at least 5 to 6 years out. But I think it's for sure Bitcoin will cross $1 million. It's a matter of time and not whether if it will. In terms of use cases, regulatory adoption, I think with the pro-Bitcoin administration by Trump, we're looking at, he talked about making Bitcoin a part of the national reserves. He's talked about maybe eliminating capital gains tax on Bitcoin. So a lot of pro-Bitcoin regulation. I don't know how much of that will pass in the US Congress, but at least we have a pro-Bitcoin president coming in, and that's very exciting. So that might take as quick as 2, 3, 4 years during his administration. If not, it'll take 1 or 2 administration to sort of let that come in. And the most important aspect I want to remind people is Bitcoin thrives in democracies, because in the end, Bitcoin is about giving power back to the people. So if the people want Bitcoin and crypto to succeed, they will legislate for it, they will vote in, and this is a clear case of people wanting crypto. All the crypto supporters voted in Trump, and we're seeing that. Whereas in contrast, authoritarian countries don't like Bitcoin because it circumvents capital controls, where authoritarian countries tend to have capital controls. So you see that distinction between these two government styles.
We talk about regulation. We have to talk about the regulator. We know the SEC was pretty tough when it comes to regulating the industry. The CFTC, though, was a bit more forgiving. Do you see the CFTC playing a bigger role under the Trump administration?
That I don't know yet. I think the SEC will be sort of, I don't know if reprimanded is the right word, but they'll be asked to sort of tone it down, their strong sort of anti-crypto stance. The CFTC, I think they're just more neutral. They don't have anything inherently biased against Bitcoin. They see Bitcoin as a commodity, which it should. Bitcoin, it really is a digital commodity, no different than a digital version of gold. So from that perspective, I think the CFTC regulation of Bitcoin is much more reasonable in terms of treating it like that. And the big thing next is, can we treat Bitcoin like currency, right? And this is where it comes into the capital gains tax and all that. With currency, when you trade US dollars with euros, you buy some euros, you go on a European vacation, you come back. You don't have to pay taxes if the euro has gone up in value, right? So with Bitcoin, the question is, can we get that favorable tax treatment? So we'll see how the Trump regulators approach this problem. And the IRS is also a factor too, don't forget.
Right. Bobby, we know that crypto is not for the faint-hearted. We've seen massive volatility. At one point, Bitcoin gave up maybe half its worth. I'm just wondering, with a more predictable regulatory environment, with more clarity in the environment, will we see less volatility, or is this just an asset class that will remain volatile whatever the regulations are?
I think it's going to take another 5, 10, 15 years for the volatility to come down. And the reason is, as a global asset class, so it's not just an asset class, it really should be treated as a global asset class. It's minuscule, okay? We're talking about, $2 or $3 trillion worth of Bitcoin and crypto all in the whole world. And in fact, Bitcoin itself is probably just 1.6, 1.7, 1.8 trillion dollars. If you take all the Bitcoin in the world times its current price of $88,000. So when you look at global asset classes like the real estate market globally, the stock market globally, we're talking about hundreds of trillions of dollars, 100 to 200 trillion dollars. Even gold itself is, I think it's just over $20 trillion. So at that scale, Bitcoin is a young child. It's barely developed, right? So once Bitcoin gets into the big leagues in the 10, 15, in the 100 trillion, that's when it'll stabilize the price compared to other asset classes.
So financial stability is an issue to be considered, especially for regulators like the Fed, right?
I don't see Bitcoin's price volatility as an issue for the Fed. I don't see that per se. It's like Nvidia stock. Nvidia stock really took off a year or 2 years ago, and it's become now worth more than Apple and top market share, right? So is that bad for the New York Stock Exchange? Is that bad for Nasdaq? Is that bad for the U.S. stock market? I don't think so. I think it's just Nvidia stock is just one company that's really through price discovery that really the market thinks it should be worth much, much more than people thought 2 years ago. Same thing with Bitcoin. Bitcoin has gone up 1,000%, has gone up 1,000 times in the last few years. Why? It's because the market now understands Bitcoin better than it did 5, 10 years ago. So I think it's natural as a market discovers that Bitcoin's true use case is a global reserve asset class, then it's going to price it into eventually $1 million, even $5 million, $5 million even.